Welcome back to the channel. Monday, January 16th. Markets are closed today, but let's take a look at the charts, see how we can prepare for the next week. Okay, so the S&P 500 making moves up to the 200-day moving average right here, which also coincides with a declining trend line. So we're running into resistance right there. We did make a higher low from the October low, so I'm watching that. It does look like we do have a macro trend change. I do think that this Wednesday, 19th of October, I think this is the low that we'll see on this bear market. I think what we're going to see here is probably knocking our head on this trend line. I don't anticipate that we're going to immediately break this trend line. We're going to waffle around here and have a cup of coffee for a minute. Volatility making a lower low. We've broken below this resistance right here, or support level. So I think that means that, again, I see that this peak in volatility in October, that is going to be a macro trend change. I think now you're going to see lower volatility, although I would not expect that volatility continues to plunge lower without first heading back up here, maybe testing this trend line. Typically, as volatility goes lower, the market goes higher. So I would hesitate to chase the market higher at this point because I think we're going to see a pullback. Yeah, we've been following this SPX over VIX. You know, every 3.5 months, you tend to see these spike lows in volatility. And it looks to me like this cycle is going to invert. So I think this ends up being a spike high. And then I think pretty quickly we head lower until about late February, early March. But I think there could potentially be a quick drop into the end of this month, January 30th. It looks to me like we're going to see a quick reversal here. So I really wouldn't chase the market at this point. We've already captured this move. We're up to about 3%. At this point, the more bullish of these models continues to have some upside until mid-February. But the rest of these models look like they're projecting a pretty sharp drop into the end of this month, back to almost where we began the year. If the SPX over VIX, if that ends up being a spike high and that reverses real quick, I think you're going to be looking at downside, potentially fast downside, maybe 2 or 3% into the end of the month. I don't know if that happens right away, but this week being a shorter week, I think potentially Thursday or Friday, I would be expecting a drop off. I would not be chasing the market higher at this point. I'm going to be looking at the charts this week, but I'm really concerned chasing the market here, trying to capture this bullish move here, really exposes you to this downside that these models are predicting. So you really want to buy when volatility is high. You know, if you buy at those volatility spikes, it's generally when investors are most nervous and scared, and you want to buy when everybody else freaks out and then sell while everybody else is bullish. I would really hesitate and wait for a pullback at this point. You know, we're expecting the low for the year here around the turn of the month, February into March. So that's how I'm going to play it. Oh boy, this dollar index has gotten absolutely hammered. Look at that. Oh man. Yeah, I didn't think anybody saw this type of reversal on the DXY. This thing just got smoked. You look at the gold chart, gold's seen a fantastic run. I think it's back up to like 19.25 now. But eventually, I think we test this trend line here. I think this probably is a high in early summer, and I think that is a buying opportunity for gold. That's what I'm waiting for. So I did post on Twitter, and I updated my portfolio. I did close all of my positions except for this AMLP ETF and the Bitcoin position. Of course, I'm not closing that one. But AMLP just hasn't hit my target yet. I'm going to try to squeeze a few more percentage out of this one. The Bitcoin, I'm not touching that at all. That's going to be a long-term holding until 2025. Let's take a look. Bitcoin's seen a great run, great run. If you failed to accumulate down at the lows here, I wouldn't chase it at this point because Bitcoin's probably going to follow the market lower into late February, early March. So I would wait until then to accumulate any more. But as you can see, Bitcoin's really going to start having some stronger upside moves. I think this early November when FTX blew up. So that I think this is the low for the 4-year cycle. From here on out, I think we have 3 years of upside in Bitcoin. I've also been following the oil to gas ratio and playing this long short. And I mentioned on Twitter that I closed my gas short earlier last week, and then later last week I closed the oil long. Hit my target here, so I closed those positions. I'm going to be looking for momentum down here to start reversing. And as soon as I see that reversal, I'm going to look for an entry opportunity. and basically reverse this trade and go short oil, long gas. So this has been a pretty good one to play. It's consistently been a moneymaker for me, so I'm pretty happy about that one. So thanks a lot, guys. We'll see you next week.